Hello everyone. In this video, I will introduce you to the new system of intercompany accounting. So in the previous method of intercompany transaction, what used to happen, all the transaction relating to intercompany were routed through an AP module. So as you all have created a vendor code under the AP module, which are linked to the vendor group mainly through V61, V63, V64 as per the relationship of the entities. And now accordingly, all the intercompany transactions were affected. These vendor group were further linked to the GL, which affected the financial effect in the trial balance. So this was the old system that we were following up. However, now we are coming up with the new system or the new updates that have come through Microsoft. So we are moving to the new method. In this method, the entries will not be done through AP module, rather they will be done through the GL module through the journal voucher. In this mechanism, entry is effected by initiator or by the entity making the payment. So it is in this method, one entity makes an entry in their books of account. Automatically the reverse effect of those entry is replicated into the other entity who is part of the transaction. So in this, as I mentioned, entry in the recipient entity is automatically posted. However, to eliminate posting of entries which are error prone, so we have introduced an approval mechanism. So let's say one entity makes an entry, the entries will not be immediately affected in the books of other entities, so it will require a prior approval and then the effect will be taken. Why this new method is being introduced and what is the benefits? It is easy in elimination and consolidation of account at group. So automatically, as this transaction are connected with one entity to another, it is easy in doing the automatic consolidation. So previously, when the consolidation of accounts used to happen, it was done manually, and the elimination and consolidation of the accounts were done manually. So in this process, it will be automated, and it will eliminate the issue. Further, at the every month we are requested to do the reconciliation with the other entities, and then major point of reconciliation is the transaction is accounted in one entity but it is not accounted in other entity, and so on. The differences would occur, and the reconciliation would process would take place. However, in this, if one entity makes an entry, the effect in the other entity is automatically done. So in this case, or in this new mechanism, we will not have the issues of posting the entries twice. It will be posted once, and automatically we will not have unreconciled item at the year end or the month end whenever we do the reconciliation. As it is one point of accounting, it will save a lot of time, and it will make our intercompany transaction more efficient and transparent. So I will explain you with an example how it is being done. So let's say the management fee is charged by Anjing Lebanon to Equistock Hong Kong for 1000. So in the old system, what it happens, the management fee account will be created by the accountant and they will debit the vendor module. So as I told you, all the transactions were previously done through the AP module. So here, this is how the transaction was effected in both the entities. However, in the new mechanism, the entry will be done here. The initiator of the transaction is IELB because they are the one who finalizing the amount of royalty that needs to be paid, or the management fee. So they will debit the management fee, they will credit the management fee income account, and they will debit the management fee. However, if I go to the ERP and I show you the transaction, on one line, on the line of the transaction, you will see the two entities. One is the entity who is the initiator, and other is the offset entity. So here in the offset entity, we have to select the name of the entity who is involved in the transaction. So I have so here I am selecting Eki stock Hong Kong because the transaction is between ILB and Eki Hong Kong. So what will be the effect of this? So in this method, in this process, we have already identified all the entities who have the relationships. So an entity can have how many relationships? All the relationships are established, and for each relationship we have assigned the GL. So whenever the transaction would take effect, the automatically the GL would be effective. So that's how it operates. So coming back to the transaction, so let's say if I select the management fee GL, so engineering Lebanon will credit because it's an income from for them. They will credit that, let's say with 1,000 US dollar, 10,000, and the next effect will go to in the books of Ekistar Hong Kong. So here the GL is 6611002. So HK, and I will select OP, and the currency would be dollar here. So if I post this transaction, what you will see, so here GL to GL entry is being done. Okay, GL to GL. Where is the intercompany account? As I told you that we have already mapped all the relationship that can exist in our group, and the GL we have already linked. So in this transaction, if I go and select the voucher in the books of ILB, what you can see, the income account credit for management fee and the intercompany operation account is debited. So automatically the GL has been linked with between the relationships of Ainjing Lebanon and Ekistrock Hong Kong, and accordingly the GL is selected and the transaction is posted. Okay, the similar effect is also given in the books of Ekistrock. Okay, so this is how the new mechanism is introduced. However, I will take an extensive training for this in our during a call and meeting, and then I will walk you through the full process. So thank you guys.